kind of apna ghar?
Hello and welcome. This is BloombergQuint. Well, Titan has come out with earnings and, well, a steady quarter, and which was evident in the kind of reactions that we saw from investors coming in through. But to talk us through how the quarter's gone by and what we can expect going forward, I'm in conversation with Mr. Venkatraman, who heads Titan at this point in time. Mr. Venkatraman, good morning and thanks for taking the time out. Let me start by asking you about the jewelry segment. While you guys have mentioned in your quarterly update as well as the press release that we've seen the wedding season, the festive season come in aid of, well, the jewelry sales. But if we were just to talk about this particular quarter in Q4, how are things panning out for this particular, well, segment, as well as I reckon that you guys will continue to be, well, holding on to the guidance of 11 to 13% for this half.
Yeah, quarter three was a very good quarter for the jewelry business. The retail sales of Tanishq grew around 15% in the quarter. And my apologies, I have a bad cough. And it is our assessment that our performance is significantly better than most of the other players in the jewelry business, jewelry industry, and therefore helping us continuing the momentum in our market share gain. Our H2 outlook that we had shared in the last quarter continues to hold, like you said, between 11 and 13%.
The next question then is one, a little bit of an idea on the Golden Harvest scheme, as well as, well, the collections that we may be looking forward to, perhaps a continuation of the collections that we saw in the Q3 that may go into Q4 and that may aid and give us a better idea of how jewelry well, can turn out.
Actually, the biggest activity for jewelry in quarter four is the diamond jewelry activation, which is currently on. And we typically depend on it, and a lot of customers wait for it as well. We depend on it for the quarter four performance and growth. And there is no major collection launch planned in quarter four, but will follow in April, just before Akshaya Tritiya, and when the new year begins.
Okay.
Golden Harvest is more a steady enabler of the business, and there is nothing particular to comment on it for Q4.
All right. So what I did notice was a very sharp drop in your raw materials costs. Which is, of course, a positive. But that said, your gross margin still did come off on a year-on-year basis. So can you explain how things are panning out when it comes to inputs going in and what we can expect going forward as well?
Actually, the gross margin of the jewelry business as well as the gross margin of the company have been holding steady from a 9-month point of view compared to last year. Sometimes, quarter on quarter, there are changes because the entire accounting of gold is a complex, aspect, and you gain in some quarter, and the hedging corrections come and make up for it in the next quarter, and so on and so forth. But from a 9-month point of view, the GC margins for each business as well as for the company as a whole are holding, and nothing, to report or comment on it for quarter four.
Okay, so when it comes to sentiment on ground, of course, we did see the wedding season, the festive season come in aid of Titan. But the real question is, considering the gold prices and where they are, do you think there's a possibility that demand for jewelry in general overall may just fall to a certain extent over the coming couple of quarters, unless and until, of course, we see a correction in gold prices?
Yeah, it is very possible, because even in the 9 months that have passed, the sentiment hasn't been particularly good. It's because of our brand strength, our on-ground asset strength, as well as our execution of all the strategies, which has helped us to buck the general consumption challenge that we are facing. It's going to continue for the next few quarters. We are certainly bracing ourselves for it. The only positive way to look at it is that we are less than 10%, 6-7% of the entire jewelry industry, and therefore, even if the 100 becomes 95, there is still some 88 in the industry for us to get our 1 or 2 that we need extra from. That's the manner in which we look at in the jewelry business. That's the manner in which for we look at in our eyewear business where our shares are very low.
Okay.
But to so comment specifically on your point, yes, sentiments are a little down, and we expect them to be continuing for a while now.
All right, sir. So then I want to move on to watches. A quick question here is that when it comes to the sentiment, how is the mass segment doing as against the premium segment? That's one thing. And what's the traction that you are witnessing when it comes to your smartwatches?
The Titan brand has done exceedingly well in the 9 months, and the premium side of the Titan brand has done even better. For example, the World of Titan, which represents the brand Titan, grew 11% in Q3, which is a handsome growth, and the 10,000 plus collections and 10,000 plus segment outstripped that 11% at close to double that growth. So therefore, we are seeing a significant premiumization opportunity, and therefore we'll continue to press the button on that in the watch business.
Sure, sir. And a final question then is to do with the watches and the growth trajectory going forward. And I can understand that weak demand sentiment has led to a year-on-year flattish movement, if not marginal drop. What's the way forward from here on? Do you think we could see some challenges with respect to demand in watches even in the next couple of quarters?
Actually, if you look at the 9-month growth of watches, it's a different picture from what you see for Q3. And the reason for that is that we end up having adjustments, particularly in the primary sales channels like the trade, where the purchases of the channels shift the last month end of that quarter and so on and so forth. So if you look at the 9 months performance of watch business is much better than the 3-month Q3 performance, and the retail performance, which finally is the barometer from a consistent health point of view, is 3 months as well as 9 months. In the World of Titan, in the large format stores like Shoppers, in Helios, which is our premium watch brand channel, all are positive. So the watch business has delivered a growth YOY 9 months. And we expect to continue to push that growth going forward as well.
All right, fair enough, Mr. Venkatraman. Thank you so much for joining us and taking us through the quarter. Wish you the best.
Thank you very much.
Well, that's an interesting stock that is Titan. Remember, was up about 7% in trade yesterday. Today's session is a bit flat simply because it was up 7% in trade yesterday. But it's largely been underperformer in the last 3 months, so you got to keep that at the back of your mind. But I must tell you, there is just absolutely no underperformance for 2 or 3 names. One of them is BPCL, is the second best performer on the index, and 491 from a number of 450 odd when this news around the divestment getting pushed out. It's gained nearly 10% as a result of this crude price fall and the sentiment change. What a big move on BPCL the last few days and in today's session as well. And then underneath, Reliance Industries went down, gave people a bit of a scare, but is back to about 1450 and still about 150 points lower from its recent highs.
You know, Neeraj, I think overall markets gave you an opportunity on Saturday, at least to the traders or even long-time investors, to enter at lower levels. We've reclaimed the mark of 12,000 and not just reclaimed that mark, we're sustaining above that level, which is, pardon me, very important. Remember, the next level is the 50 DMA at about 12,130, which the street will be watching. But there are a couple of stocks which are doing really well. Tata Global being one of them, reacting pretty positively to the numbers. I think more or less it was factored in. The coffee business, Tata Coffee, which is the subsidiary, they too had posted good set of numbers. As a result of that, of course, tea business performance has not been great, but Tata Global overall has been doing good for the last 2 or 3 months. Then you got Tata Motors, which is your top nifty gainer. And well, Neeraj has been highlighting IRCTC. There is just no stopping for that counter. I think now it's up about 6 to 7%. It's crossed the mark of 1500 as we speak. And even TVS Motors, though the numbers were in line performance-wise, there's a degrowth. I think what's standing out from most of these companies in this slowdown environment, they've managed margin expansion, and I think that's been the theme for Q3 so far. You've got TVS Motors also sitting with gains of about 4%, and a couple of other stocks. Pull up DLF. Let's see if there is some reaction coming by ahead of the numbers, because yesterday the stock was up about 5%. You've got DLF also sitting with gains of about nearly 2%. Pull up Thermax too. Let's see how the reaction is with regard to the numbers. No major reaction. The stock's trading at 1,042. And talking about the numbers, the company saw its profit rise 13% in the third quarter, while margins also improved, but not across all verticals. Order balance has also taken a hit in the October to December quarters. So are there any signs of macro environment improving? And in turn, this could be aiding Thermax? Let's put this question to Mr. MS Unnikrishnan, who joins us from Pune. Hi, Mr. Unnikrishnan. Good morning, and thanks a lot for joining us today on BloombergQuint. There is some margin expansion, and we were just talking how in quarter three that's turning out to be a theme because there is slowdown in the economy, but most of the companies have managed to cut down on their expenditure. And in your case, we've seen the other expenses coming off for the December quarter gone by. But net, your major segment, that's the environment segment, that's not done well. Could you take us through the highlights of the quarter and what were the bottlenecks you faced?
Well, let me start on with the order intake. It had been on one side comforting, other side little disturbing. The comforting fact is the overall order intake for the quarter has gone up by around 9%, going up from 1430 to 1600 crores, which is a positive to talk about. But what is a little negative in that is environment segment is the one which has helped us to have an improvement in the order intake, especially the FGD order that we've been able to pick up from one of the power companies. Otherwise, on the overall order intake, I would have been better off in case if I could be getting more orders from the domestic market. I need to be confirming that order finalizations both in the infrastructure area as well as in the consumer-facing industry had not been up to the mark in the last one quarter. We may be one of the better of companies to be possibly reporting an order intake better than the previous year. So that is point number one. On revenue side, it is almost flat. The -2% is here or not there. That makes you under that. There again, there were no major execution challenges. However, the customers aren't as pushy in the current circumstances to complete the project on time. It is our push and execution ability which is even been able to bring it to a level where almost closer to last year's same quarter. Fourth quarter, I'm hopeful that market may be improving. Otherwise, there were no customer pressure for execution. Not that I have piled up any inventory. In fact, my inventory has come down only because we had been very prudent in managing the balance sheet. On the profit side and the EBITDA, we had been able to improve. Though at the PBT level, you may find a little lower, but net PAT level, of course, certainly it has gone up in comparison to last year and is a better YTD level also. That's overall about it. But the markets are not sounding very good. We're not. I was expecting the post scenario of the budget. Maybe the sentiment should turn around. So let's wait and watch, Neeraj.
Sir, could you spoke about the order inflow. Can you tell us then, for 9 months now, how's the inflow been and what's the outlook going ahead, and where would you end FY20 at with regard to order? And also if you could share a guidance then, looking at the current macro environment.
See, the order intake for the first 9 months of the year is 4,300 crores rupees in comparison to 4,400 odd. So it's just about a -4% in comparison to previous year. I am hoping that I should be able to hit the last year's number at least, which is not the case with the industry, because majority of the industry currently is other than those who are working in the road building equivalent of that. Everybody is complaining about order reduction. So I may be able to meet up with the last year's number, which is what we are currently trying for. We only are maybe less than 3 months away from 2 months away, just about February and March to see that. The trend is looking like we should be able to match up with the last year's number. However, what I'm concerned a little more about beyond the Q4, because capital goods companies should not be talking about one quarter. We should be thinking about a little medium to long term. Enquiry pipeline is looking positive for the project side because we got Barmer refinery going to be ordering out in the Q1 of next year. We also have the Gujarat refinery and Panipat refinery also inquiries out in the market. So we will be one of the major players. Of course, there you'll have to bid and win, and bidding and winning in oil sector with very less number of inquiries in the market, there will be a toughness on the margin going forward, but we'll see how we manage it. Similarly, from the international market also, there are a couple of projects which are moving ahead. My only current worry about projects execution or project order finalization is how far is the coronavirus issue going to be impacting the global trade, and will there be postponements on account of that in the global market is something which should be seen. If it is going to be, like peaking in the next maybe few weeks and then going to decline, then global trade will not get impacted. But if that were to be piling up beyond a level and spreading across the globe the way people are suspecting, then all of us should be concerned about in the entire industry that we may miss out some time for the global trade itself. So let's wait and watch on that count. Otherwise, I am hopeful that there is nothing like a negative surprise in the budget. That's something which I need to say that. It's all a little medium to long term thinking articulated, fairly good amount of money allocated for the various sectoral development which can have a positive impact on companies like us, provided they are able to go ahead with the projects. So all of us are looking forward to maybe a coming year where order intake should be improving towards the second half of next year. So that's the overall outlook related to the market.
Mr. Unnikrishnan, good morning. Neeraj here. Just wondering, would the domestic spaces and sunrise pockets, maybe specialty chemicals or some of the others, will not come in and fill in the uncertainty around, one, the domestic outlook, which you said is not really gung-ho post-budget, or the uncertainty around the globe?
See, specialty chemicals should do better, will do better, because the chemical plant is fairly well stabilized right now, which is a difficulty which I found maybe in the beginning, but it is improved. But specialty chemicals cannot fill in the gap that will be left by laxity of larger projects. For example, an FGD order is 400-500 crore. The entire turnover that I will be able to do in a year for my chemical business will be around, say, 500-600 crores of rupees in the coming year. So that cannot fill the profitability. Certainly, they are really helping us and will continue to be helping. So that should certainly be helping me to ensure that we maintain the margins, even in a very difficult market circumstance where a dog-eat-dog is going to happen, maybe for the next few quarters, with many of the competitors not having sufficient orders. So in that kind of a circumstance, I'll be better off in comparison to my competition with a fairly well-established chemical business also growing faster.
But you are saying unequivocally that it might be futile to try and figure out what the next year could look like, simply because the domestic pipeline has not yet started and the future on the global front remains uncertain because of coronavirus. It's almost impossible to predict right now.
In my opinion, I will be opening the next financial year as a group more or less close to the last year's opening orders. It is not that I won't have any carry forward orders. I should have maybe give or take a 5-10% here and there. The opening order book for the company at the group level should be closer to that kind of number which I mentioned about. If there is no difficulty in executing orders, which I mentioned about corona equivalent, or that I don't think it should be. It may be a lot more of scare than the reality also. Let's for the time being count that way. And our execution abilities, you've seen that we have done even a 2,000 crore execution in a quarter. So even if there are some skirmishes, we should be able to manage to execute in the time available. So we are heading for a year where it will not be any dip in the next year. We're targeting that at least we should be able to do what we achieve in the current year, or maybe marginally better. So I'm not looking at something negative, but my worry or concern or maybe a challenge is that how do I book more quantum of orders which we are ready for, because I have capacity available, whether it is for domestic market or international market. We are executing projects in every part of the world, in the most difficult Africa to Middle East to South America. So if there are projects available, we would be very happy to pick those orders. But projects should happen. That's all what we are looking forward to.
All right, so execution is not a problem for you right now, but largely most of the companies and economy has been facing those liquidity pressures. Just for your company, sir, could you tell us what are your working capital days, and are there any delays in terms of receivables?
Frankly speaking, my overall net working capital requirement, in any case we don't have any borrowings for working capital, it's only our own funds we are deploying in that, has come down in the last 2 quarters. We are currently at around 170 crore is the total net working capital that I need to do a business. You can see the kind of size. So we are one of the better of companies where we are very well managed. To do maybe a 6,000 crore, if I use only 170 crore as a net working capital, you can imagine many companies will be borrowing maybe a couple of thousand crore to run this kind of a business. That's a prudence that we normally manage. As you mentioned about payment releases are not an easy task in the current circumstance. Even the guys who are plumb with money may want to delay, taking the umbrage under the umbrella that there is a cash flow difficulty. I have not come across any substantial cash flow difficulty for my project orders. However, for the MSME sector, where I do supply my equipments, their fund flows are under stress on account of the NBFC difficulty, and only those who have got decent balance sheet even in MSME are able to be paying upfront and taking deliveries. So there are pressures on medium sector. When I say MSME, don't look at some very small companies. In India, a 500 crore turnover company, a small chemical company, or somebody who does food processing of a small nature fall under MSME nature. And some of them who depend upon NBFCs for their funding may not be in the best of the condition, but we are managing with them because we are very considerate. Because remember, 65% of my orders are coming from the same set of customers, so the repeat orders we do get. So we have internal equations with companies of the kind. It's more of a partnership rather than we being treated as a supplier and they as a buyer in many cases. So we are considerate, many of them. There could be deferred payment terms which you offer to them, which they are able to fulfill also.
Mr. Unnikrishnan, we hope FY21 is better for the company, and we hope we have one more interview with you for Q4 since you stepped down in the month of June. All the best to you for all the interviews that you've given to us and for this transition period.
Thank you. Thank you. Yeah.
Okay, that's the management of Thermax clearly stating that there is no issue with execution, but of course the slowdown that the economy has been facing, order inflow remains a concern. But time now to hear out what Shriram Transport Finance's MD and CEO Umesh Revankar had to say about its third quarter numbers. Shefali started off by asking him about marginally drop in NPA and whether the trend will hold in coming quarters or not. Listen in.
Yeah, so, first of all, I should say that environment in the rural side, rural market is quite good. And that has really helped us because ultimately economic activity that helps a customer to earn more and pay better. The other thing is, let us understand that most of our customers are individuals who depend on the earning of the assets to make a living and making the payment. Now, as for NPA recognition norms are concerned, we have made a lot of changes, especially if you recall that all NBFCs were at 180 days for recognizing NPA around 4 years back. From 180 days, we have moved to 150, 120, 90 days progressively. And now we have moved to the new accounting standard in the AS accounting, where the more than 90 days are stage 3. And you also have a stage 2, which are more than 60 days. Even that is also taken into account for making a provision. Now, this is again a step for us to go and inform the customer that a customer has to continuously remain less than 60 days so that it doesn't get into any kind of a provisioning. So the communication to the customer takes time, and we have done it progressively without really disturbing customer business. So we are able to now communicate it better to the customer, and therefore it has resulted in better recovery. And I think going forward things will keep improving because it is because of the continuous communication that we are able to make changes in customers' behavior. Otherwise, he would have paid anyhow, but because of the circumstances, things are getting little delayed. And if you are able to reach out to him, he will be able to pay mostly on time.
Okay. Sir, aside of that, so what kind of growth did you see in various segments, and what would be your guidance going forward as well? Which are the pockets of growth that you see at this point in time?
See, basically, the businesses which are not impacted or affected much are e-commerce activity, the rural agri-based activity and normal consumption, day-to-day consumption. These are the three are not impacted. So used vehicle demand for this segment, because these products are normally catered by the used vehicle and ICV segment, demand for this will continue to remain reasonably strong. The demand which is dependent on infra mining, that is yet to come in a big way, especially if you look at infra helps the cement, steel and building material. Those areas there is not much of activity. There has been a slowdown, and of course there has been last 15 days we do see a certain positive movement. That should help in the next couple of months. I think as demand there or government spend there increases, the demand will come back, and I think it will take maybe next couple of quarters for that kind of demand to come back in the infra, mining and construction activity. That should help the heavy vehicle to revive.
Okay, so you said couple of quarters. How many quarters? 2 quarters, 4 quarters down the line, do you see the recovery happening when it comes to especially the heavy commercial space?
I feel there could be some demand now in the month of February or maybe in the early March for a BS4 vehicle for pre-buying. There could be, because we do see more inquiries there for new vehicles. But I think mostly the demand should come post October, November, because once this cycle is over, when we move into BS6 vehicle, immediately launch of BS6 vehicles are not being announced. So we are not sure whether BS6 vehicle would be ready for, especially in heavy segments. So it may take a couple of months for the new vehicles to be launched and people to absorb it and start buying it. Therefore, I expect the new vehicle demand to come only in the later. But the used vehicle demand continues to be quite good because the rural market is good and the agri output is all-time high. Both Kharif and Rabi crop has been much better than the previous years. So all these are quite positive for the used vehicle demand.
Okay, sir, you also mentioned in one of your earlier answers that the activity in the rural areas is looking quite good, and the rural AUMs now form 40% of your total AUMs. So going forward, what is it that you are targeting going forward in terms of the business composition, and where would your focus be on?
I think rural should be 50%. That's what we are looking at, and because we are opening more number of branches and centers in the rural area, we should keep adding. Last year, if you look at year on year, we have added 300 plus branches. Most of them have come in the rural. So therefore, definitely our ability to reach out, because rural is nothing but reaching. I don't think we have really reached, we would have reached only 30% of the total rural market. There is a huge scope for us to create a reach, because unless we create access to the customer, we will not be able to reach to them. So our positioning in the rural market and creating a reach, that is very important, and we are continuously doing it. And as we reach, definitely our rural portfolio will be larger than the urban.
Okay, sir, just a small question for my knowledge sake. Have you done any sort of analysis, or is there an estimate as to how soon does it take for a branch in urban area versus a rural area to break even, and how is the cost of operations like in the initial years in the two regions?
See, in the urban area, we are able to reach break-even much earlier, because depending upon the strategy of the company. If you are trying to take a market share from other company, you can reach the break-even within 6 months in the urban market. But in the rural market, it may take nearly 2 years to reach. But advantage in the rural area is, once you are able to reach a break-even, your margins are much better, and you don't have to really acquire a market share. You are building your own business organically. It's much more stable and much more profitable over the long run. But in the urban market, it's subject to a competitive environment. So we don't really prefer to grow in the urban market. We prefer to reach out to the rural market, and our business model also is more tuned towards used vehicle and individual operators. So we would prefer to be in the more into rural market over the period.
All right, Mr. Revankar, thank you so much for joining us, and hopefully that growth can pick up and you can replicate the kind of performance that you had in this quarter. Thank you, sir.